Citing ongoing demand for AI compute infrastructure and increased visibility into the company's order backlog, Jefferies increased its price target for Nvidia from $220 to $240. Nvidia was taken off the list of franchise picks, but the company kept its buy rating. Analyst Blaine Curtis claims that as AI capacity expands globally, hyperscale cloud providers like Google, OpenAI, and Anthropic are vying for resources. According to Jefferies, Nvidia anticipates fulfilling over $500 billion in orders between 2025 and 2026. The Blackwell and upcoming Rubin GPU systems will be the subject of these orders. The company increased its revenue projections for 2026 and 2027 from $283 billion and $334 billion to $293 billion and $384 billion, respectively, after seeing those figures. Earnings per share are predicted by the analyst model to reach $9 in 2027, but they may exceed $10. According to Jefferies, the new $240 target represents ongoing leadership in the AI accelerator industry and is based on a 27 times multiple of 2027 earnings. As investors place bets on the long-term demand for AI infrastructure, Nvidia shares increased more than 2% in recent trading, extending year-to-date gains. As technology develops, U.S. Treasury Secretary Scott Bessent stated on Tuesday that he could see a time when China and other nations would purchase Nvidia's cutting-edge Blackwell chips. Bessent told CNBC in an interview that there might be a situation in the future, I'm not sure if it will be 12 or 24 months, given the amazing innovation that occurs at Nvidia, where the Blackwell chips might be 2, 3, or 4 levels down their chip stack in terms of efficacy. They might then be put up for sale. Additionally, the Treasury Secretary stated that trade relations between the United States and China are going well. He mentioned the possibility of a meeting between Chinese President Xi and President Trump at the next G20 summit. According to CNBC, Bessent stated that numerous other authorities may be employed in relation to tariffs, contingent on the ruling of the Supreme Court. In an effort to maintain its position as the primary beneficiary of the AI boom, Nvidia is using its war fund carelessly. The business and Deutsche Telekom inked a $1 billion deal on Tuesday to establish an AI factory in Munich, with the goal of increasing Germany's AI computing capacity by 50%. The initiative, known as the Industrial AI Cloud, would deploy RTX Pro servers with up to 10,000 Blackwell GPUs and over 1,000 Nvidia DGX B200 systems to offer AI inferencing and other services to German businesses while adhering to German data sovereignty regulations. According to Deutsche Telekom, the project's early partners include Perplexity, which will use the data center to offer in-country AI inferencing to German customers and businesses, and Agile Robots, whose bots will be used to construct server racks at the facility. Additionally, the telco listed physics-based modeling and digital twins as applications for businesses in the industrial sector. According to the telecom business, SAP will supply its business technology platform and apps, and it will supply the project's physical infrastructure. The collaboration takes place at a time when the European IT sector has been urging EU legislators to encourage the use of domestic alternatives and lessen their dependency on foreign infrastructure and service suppliers. Tech firms have been criticizing the bloc's approach to AI regulation at the same time, claiming that the regulations merely impede innovation. Earlier this year, the EU pledged $200 billion to establish AI gigafactories throughout the continent, with a focus on mission-critical and industrial applications. However, compared to the United States, where corporations like Nvidia, Microsoft, Google, and Oracle have invested hundreds of billions to construct enormous data centers and other infrastructure to support the development of AI models and services, financing for AI initiatives in the European Union has been noticeably lower. According to Deutsche Telekom, this project is distinct from the EU's AI Gigafactory effort and is anticipated to begin operations in early 2026. According to Tim Holges, CEO of Deutsche Telekom, mechanical engineering and industry have strengthened this nation. However, we face difficulties here as well. AI has a lot of potential. It will enhance our offerings and bolster our European advantages. I believe this is a great opportunity to invest $1,000 if you have it on hand. Over the coming weeks, there may be a number of favorable catalysts: the government shutdown ending, a trade deal with China, a rate cut, and earnings reports. As 2025 draws to a close, All of these bullish market factors could push up stock prices. If you're searching for stocks to purchase, I have a great investment that might have a lot of space to grow before 2026. Over the past few years, Nvidia has been one of the best investment choices, and I haven't seen anything that makes me reconsider. The main computational devices used by AI hyperscalers to train and execute AI models are its graphics processing units, GPUs. There is still a sizable computing market, even though several of its rivals have recently gained popularity. Global data center capital expenditures, according to Nvidia, will increase from $600 billion in 2025 to $3 trillion to $4 trillion by 2030. That's amazing growth, and any businesses in the AI computing industry will experience enormous expansion if it materializes. Investors should keep in mind that Nvidia has significantly more knowledge than we do, even though some may laugh at this audacious forecast. The planning and construction of data centers takes years. It won't be equipped with computing capabilities from firms like Nvidia until those procedures are completed. Due to the limited supply of Nvidia processors, customers must communicate with Nvidia years before they will actually need them, providing Nvidia a better understanding of what lies ahead. I wouldn't characterize Nvidia's growth as slow by any means, even though it has slowed in recent quarters. I believe Nvidia is still a fantastic stock to purchase right now because of its 55% revenue growth and the significant capital expenditures in artificial intelligence that are scheduled years in advance. In 2023 and 2024, Nvidia might have become the face of artificial intelligence, AI investment, but in 2025, that idea has been called into question. Some investors have questioned if Nvidia is still the industry leader after companies like Broadcom and Advanced Micro Devices announced a number of significant partnerships, most notably with OpenAI. At its GTC event on October 28th, Nvidia retaliated by revealing some astounding predictions about its order process and AI dominance. Nvidia says it has orders for $500 billion in Blackwell and Rubin systems through 2026, among other significant announcements. That's just amazing, and it contributed to Nvidia's stock rising after this announcement. I still believe there is lots of room to go if the projection proves to be right, even after this move higher. This is the reason. The majority of the artificial intelligence technologies we use today is powered by Nvidia's graphics processing units, GPUs. Multiple calculations can be processed simultaneously by these devices. AI hyperscalers are constructing enormous data centers with Nvidia GPUs since they may be joined in a cluster to enhance that effect. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Folks have been concerned about AI valuations. Not surprised to see some volatility. What's the warning here as we have two CEOs who really tried to give us a little bit of, medicine?
Good morning, Nicole. I'm a big fan of news flow. And the news flow this morning is going to be Palantir's going to open down off good earnings, but high valuation. And then that valuation narrative is going to creep into other markets. The chairman of Morgan Stanley, the chairman of Goldman Sachs, speaking at a conference in Hong Kong, said a statement. It's kind of interesting, but it's also absurd on the surface. They basically said, and I'll hear, there's a 10 to 20% correction. They expect one in the next 1 to 2 years. Well, Nicole, you can always expect one of those in 1 to 2 years. Markets correct all the time. It's just part of the investing process. So that's not a big surprise. But you add that into the IMF that talked about valuations. Jerome Powell talked about valuations. Andrew Bailey from the Bank of England talked about some valuations. And now you're starting to get concerned. Why? Well, in all honesty, valuations are stretched on the upside. Based on last night's closing prices on the S&P 500, we are 3% above our 50-day moving average and 10.7% above our 200-day moving average. So we are stretched on the upside, but there's still a lot of positive things like AI news that has been really moving the market along. But Nicole, the market's going to open down this morning. The risk-off assets, most of them are moving to the upside, like the VIX is now up, over 19. It's up to over 2 points. Bonds are rallying. The 10-year yield is down because bonds are rallying. But you know what? The dollar's up. But you know what's not up? Gold. Gold, that has been such a popular trade lately and historically has been a risk-off asset, is down almost a full percent, about 0.9% pre-market. Bitcoin also down 2.8% to start the day. So, the markets are trying to figure out what risk-off means right now. We know it's VIX, we know it's bonds. We think it might be the dollar, but currently it's not gold anymore, Nicole.
Yeah, without a doubt. I mean, gold has already had such an incredible run and has been giving it back. We saw it come down 10% pretty much off the highs. Bitcoin still higher for the year, an incredible run even at 105,000. But there is a bit of a risk off this morning. But each time we're seeing this, people buy the dips. And I know that you had Solomon from Goldman Sachs and Ted Pick from Morgan Stanley sort of putting out that cautionary tone. But folks have been buying the dips, and that's sort of been the mentality. Unless otherwise noted, it seems they're going to keep on buying. What's Scott Bessent saying this morning? What are we watching there?
One last thing. Just remember, Nicole, there's $7.7 trillion on the sidelines right now in this market. That is why there's people buying the dip. Scott Bessent did a pretty long-range interview on CNBC, talked about our great relationship with China, talked about the government shutdown. He said he's looking for 5 heroes to cross over and vote yes. He also said that there are some whispers starting between moderate Democrats that may want to reopen the government. Remember, 35 days, we're hitting a record for a government shutdown. Today's a big day in places like New York, New Jersey, Virginia, California. There's elections going on there. Maybe that would release some moderate Democrats to move across and vote yes to open the government because, Nicole, I'll tell you what no politician wants, and that is people traveling for Thanksgiving to hit these problems at airports, because that would affect all of them negatively. So I think there's pressure to get it open before that. There's starting to be some whispers, but I've said that before, Nicole, and it hasn't shown up. So I think Scott Bessent had real positive comments on things like U.S.-China trade and reopening the government and everything that's going on in terms of the economy being strong.